Everyone, welcome back to your Weekend Market Outlook. This is 48th of September 2025. Let's just jump in very quickly into what we have from last week. Focus is definitely going to be on labor numbers, and if we take a look at the NFP numbers, it was a lot lower than what the consensus was. There was also a little bit of a revision to the upside for July's number, so we are actually getting a really low number on the NFP numbers here. The unemployment rate relatively stable. As per consensus, we got 4.3% here on the unemployment rate. So if we take a look at the conditions there, at least data from the BLS does indicate a little bit of a conflicting view because the NFP dropped significantly. But we're not really seeing that being reflected on the unemployment rate because if we saw that drop for the NFP numbers to 22,000, then the estimation on the unemployment rate, if it matches, should actually push the unemployment rate closer to 4.5%. But we're not seeing at that level as of yet. So again, I think a lot of traders are going to be a little bit more cautious here in terms of which numbers to really trust. Is it going to be the NFP numbers? Is it going to be the unemployment rate? But I think the unemployment rate, sampling size is just too small. It's just going to give us a lot more of a stable results here. Now, private sector's employment, obviously we are looking at a really low number as well at 54,000 here. And also the weekly unemployment claims ticked up a little bit higher here on the labor numbers. Okay, so a lot of the focus is still going to be on this week's inflation number, and that's basically what the other set of data that traders are going to be looking at before the interest rate decision by the FOMC this month. If you take a look at the CPI number, the year-on-year CPI number here, we're expecting quite an increase from 2.7% to 2.9%. So this is to be expected because tariff kicks in the month of August. This is going to be the CPI numbers for the month of August, so we do expect that higher inflation numbers, and monthly rate of change is also going to go up from 0.2 to 0.3%. Core CPI, at this point in time, it is relatively stable, but I think the main focus again, it's going to be on that CPI numbers there. If it shoots beyond 3%, that's going to put the market at a dilemma because it will basically mean the FOMC would have to choose to preserve or at least control inflation, and that wouldn't allow them to cut aggressively as what the market is kind of expecting at this point in time. We also have the European Central Bank interest rate decision. That's also going to be on Thursday, just 50 minutes before the CPI data is actually going to be released. We're not expecting any changes here. I don't think the ECB is going to be adjusting interest rates until the FOMC has made a move this month here. All right, let's move on to the technical to Aussie USD. Very stable, 64.66 unchanged. We basically remain inside this range here, pivoting around that 65 cents. So nothing new here for the Aussie USD. If we take a look at the Euro USD, still being pressured by that resistance trend line here. In terms of the trajectory here, we expect a little bit of a pullback closer to 1.16, test that as a support. If it holds, then buyers might come into the market, but if it breaking below 1.16 would actually transition the euro below the Ishimoku cloud in the month of September, so something to keep an eye out for. In terms of resistance to the upside, we need a clear daily close above 1.1750 before we can confirm that that resistance trend line was basically broken. All right, sterling here, very flat, potential for inverted head and shoulder pattern here. But yeah, this is currently still in range. We got support at 1.34. We also have a strong resistance at 1.36. Until either of this level breaks, we're not going to go anywhere with the sterling at this point in time. So those are going to be the two key levels that a lot of traders are going to be focusing on. That would actually be the opposite of the dollar yen at this point in time. The dollar yen, we're also going to be looking at 149 as a major resistance, and we also have a major support at 147. What's really interesting here is that if the dollar yen breaks below 147, it will also break below the support trend line that we have. It will also take the dollar yen below the Ishimoku cloud. So that would be something to keep an eye out for, because unlike the Euro USD and unlike the sterling there, where it's just going in and out of that Ishimoku cloud, the dollar yen has been consistently above the Ichimoku cloud. We're just basically reaching that Ichimoku cloud last Friday there. We saw that bounce from 147. So 147, 149, that's going to be the range for that range bound market condition. Any break below 147 could actually send the dollar yen spiraling down very, very quickly to 144. And any break above 149 would send the dollar yen to test July's high at 150.91, which is about 151, where we have that very short block level. All right, so that's pretty much it for this week. Good luck with your trades, and I'll see you soon.